Thanks, Jen, for having us, everyone here, folks. My name is Brady Dale. As it was said, I'm a senior reporter at CoinDesk. If you're not familiar with us, we cover cryptocurrency all around the world. I'm here with two guests who have excellent perspectives on the topic of Libra and cryptocurrencies. Oki Matsumoto, CEO of Monex, which is an organization which has shown interest in the Libra project in the past, and Simon Potter, who is with the Peterson Institute now, long time with the New York Federal Reserve. I find it fascinating that he was there during the financial crisis, which is also where Bitcoin had its origins. So maybe we'll get into that a little bit. But we want to do a little table setting and talk about some topics, some of the sort of basic topics in cryptocurrency. But before we do that, I just want to do a quick update from one of our panelists. I want to hear from Mr. Matsumoto about your company showed interest in Libra last year. Why was that, and sort of where does that stand now? Are you still in the same place you still like to join, and what's going on there?
Well, in my group, we have a large cryptocurrency exchange called CoinCheck in Tokyo. And, I used to be, I started my career in the investment bank, and I was a derivative trader. I joined Salomon Brothers in 1987. And then those days, derivatives were really kind of hated by many people, and then we didn't have hedge accounting, and so it was really kind of Wild West. But at that time, it was Salomon or Goldman or some other those the large investment bank were in there, and then it harnessed that the derivatives to grow. And then many regulators and scientists and the many people came in there, and then we created a new technology, not only technology but also the legal framework and accounting and everything, regulations and everything. And then what happened was, in a short after that, derivatives were really kind of welcomed by all industry and the regulators and everybody. And then it was Salomon, Goldman, those people who were there at the first time who made a lot of profit out of that. Right? Okay. So for me, to be there at the first time is very important.
Right.
How not only technology, but also the regulations and accounting, everything, how those kind of things will evolve. To see at the first hand is very important.
Okay.
So we raised hand to try to join the Libra Association.
And any updates there? Or?
Well, as you know, things got really
a little rocky,
right?
Yeah.
And then after that, they kind of stopped talking to us, basically. So nothing really going on.
If they called you tomorrow, would you still be in?
It depends.
Okay.
But it depends on price. And it depends on how not only the economy, but also how the world looking at the Libra is something that we have to calculate.
Okay.
So
Mark Zuckerberg, let's make a deal.
Yeah, but we are still kind of interested.
Okay, great.
In total concept.
Okay, cool. So let's talk a little bit about what we're talking about. Libra is this new cryptocurrency, came out around spring of last year from Facebook. Let's do a little table setting here. Mr. Potter, I know you wanted to start off by just talking about, before we even get into cryptocurrency, like what is cash?
Yeah.
Like what is the...
So I'm going to pull out a $20 bill.
Yeah.
And...
Please.
Yeah. So I believe everyone in this room would take this from me. Because they all know what that is. And it's got the number 20 on it.
Yeah.
And you're pretty sure that I didn't go home and try and photocopy this and make lots of them. Yeah. All right? And then if I hand it to you, you're completely responsible for whether this is cash or not. Yeah?
Right, yeah.
All right. So that's one thing. This has been around for centuries. There's a lot of work that goes into this. One of the things that it costs each year $600 million to print cash within the US. So when you think about Bitcoin and how much power is required, it's actually quite expensive to print cash to make it hard to counterfeit.
Right.
And then I have also this Pasmo card from Japan, which is pretty helpful. It's an electronic record of some money that I gave. Now it's not quite as private as this thing.
Yeah.
Because if I use this somewhere in Japan, for example, I want to ride on a train, people will know. They won't know it's me necessarily, but they'll know that trip took place.
Yeah.
And if I hand it to you, you'd have to trust me if I said there was 1,000 yen on here, right? Unless we had a reader, so it's not
Right.
quite as good as that.
Yeah.
One of the things, if I give you both of these things,
Great.
and I say, I'd like to give you the $20, but it's that $20. Would anyone want that $20? Because I've given it to Brady now, or not?
No, because I've got it. Yeah.
Yeah. So one of the great things that Bitcoin solved is this double spending problem. That instead of having a central account somewhere where you would check, you could get something very close to cash, where it would not be possible to spend the money twice, even though there's no physical movement, as we just did.
Yeah.
And that was the big innovation back in 2008 and 9, and cryptocurrencies build on that. It offers something that's helpful because, I had to reach like that.
Yeah.
I could do this with the cryptocurrency with someone back in Japan right now. That's pretty easy to do.
And without virus.
That's right, yes.
Yeah.
Yeah.
And that promise is a big part of why people have got excited about cryptocurrency. There's a second part we should talk about in a little bit about how it also has some value as an asset class, different from existing asset classes.
Yeah. One demo I saw one time at a crypto conference, someone sort of off of what you said about cash is like, and you guys probably know this better than I do, but in the global financial system, when two banks do that digitally, there's all these checks and rechecks and overchecks to make sure that it actually has settled. Whereas here, like as soon as that went into my hand, it was settled, which is very different. And crypto comes Bitcoin comes kind of close to doing the same thing. So maybe we should just talk really quickly about cryptocurrency.
Because the paper bill is it's a database.
Okay.
Yes.
Yeah.
It's like the bearer note.
Yeah.
It's written there, and you can use it.
Yeah.
This
It's a distributed database.
this is not a database.
Uh-huh.
This is just a kind of key to the database.
Right.
But this is database.
Yeah.
And
Exactly.
the blockchain is a database.
Yep.
So it's very similar to paper bill or bearer note.
Yeah. Right. So maybe we should talk a little bit about crypto without getting too deep into it. But I think one of the things I think Libra brought up for people is the fact that I think in a lot of people's minds, Bitcoin and cryptocurrency were kind of the same thing. Or maybe they never even heard the term cryptocurrency. They just heard Bitcoin, and there was this weird digital money. But there are lots and lots of kinds of cryptocurrencies out there which have all kinds of different properties and attributes, though they all kind of end up doing the same thing. They're mostly just for speculation at this point. But I think you sort of addressed the core of it is that that cryptocurrency is this way in which you can settle a transaction between two people, and you can really know that the person you gave some money to really has it, and you don't have it anymore. But I think what Libra illustrated, I'm curious about you guys' reaction to it. The big problem people have had with cryptocurrency up to this point, well, they've had a lot of problems, but one of the things in particular is it's so volatile, right? Because no one really knows what it's worth. There's not that many people using it. The liquidity is still pretty low. I mean, it's growing all the time, but it's still pretty low. So you just never know what it's going to be worth from one day to another. But some people have come along and they've created stablecoins of a few different architectures. And that was the big thing Libra wanted to do. So I don't know, do either one of you want to talk about sort of what the idea of a stablecoin and what that was going for and how does it work?
A stablecoin is one version of cryptocurrency. I mean, in the Bitcoin, people talk about, there is why that thing has got the value. But I think Bitcoin is it's like a digital diamond. Diamond is just C, the coke. How do you say?
Carbon?
Carbon,
yeah.
right?
Yeah.
And it's like a pencil. But people buy, ladies buy, and there's a value. So as long as there's a supply demand and a liquidity, then there's a price.
Yeah.
And the Bitcoin is the same thing.
Yeah.
Without something backing that, doesn't matter.
Right.
There's a value, but it's very volatile.
Very volatile.
Right?
Yeah.
And it's like as I said, it's not like a share whereby you can calculate some sort of a fair value.
Yeah.
But a diamond you can't calculate fair value.
Yeah.
It's just a market.
Yeah.
The Bitcoin is the same.
Yeah.
But stablecoin is which is designed to linked to like US dollar, for example. So that it's like a kind of surrogate
Yeah.
of the cash.
Has all the attributes of crypto, being able to move around quickly, but without having the volatility.
Or a different version, we will have a bank account here. You can go into your bank and take out cash, and they have to give you cash. A stablecoin's a little bit like that. If you're not happy with the properties of it, then there should be some cash there.
So if folks are wondering, like, what good is a stablecoin? And in this world in which people are using a lot of cryptocurrency just to like speculate and make money on trades, for a long time there, until any stablecoins existed that would fairly reliably stay at a given price, you could go into the cryptocurrency market and you could maybe do some hustles, buy in and out of a few different currencies, and sort of on paper have made a bunch of money, but then have a lot of stress about whether or not you'd be able to get back out into fiat quickly enough to like recognize your gains, because some of these gains are only going to last for like a really small amounts of time. But then once there were cryptocurrencies, there were stablecoins. The first one was Tether, which probably your exchange trades, and almost every exchange does. You could make that gain and then flip over into a stablecoin really quickly, and you really knew how much money you'd made. You weren't gonna lose it. So that was sort of the big advantage, and obviously there's other advantages. So Facebook was going to make this stablecoin, and the difference for that stablecoin was it wasn't about securing trades on little hustles in cryptocurrency. It was about giving access to cash for people around the world where the financial system doesn't work well. So I don't know, what would you guys want to add to sort of to what Libra was meant to be?
But I think the cryptocurrency, when we talk about the financial inclusion, the crypto, if it's Libra or not, it could play a very big role. Because let's say someone tried to give money to people in Africa.
Yeah.
And then the foundation or the government gives money to Africa, but it's corrupted. So most of money is taken by local government.
Yeah.
And then money doesn't get to the people.
Yeah.
Right? So people think about, okay, so let's give some value into smartphone.
Right.
Right? So without going to government or through the bank, just give money into smartphone.
Yep.
And then some bad guy come, okay, give me your smartphone. And take your smartphone and then use that smartphone cash somewhere.
Yeah.
Okay, so again, people and money doesn't get to the people. But using crypto, as we said, it's a database. So you can design the money as like this is a value which can be only used by Oki Matsumoto,
Right.
or which can only be used to buy milk or buy medicine, not buy weapon.
Yeah.
So and then so that we can make sure that that value just go into the people, Mr. A or Mr. B in Africa, for example.
Yeah.
So that kind of thing cannot be done by cash and cannot be done by other form of currency. Only be able to be done in the cryptocurrency.
Yeah. Yeah, like I was talking to Mercy Corps, which is one of the nonprofits which is involved in Libra, and they were saying that they like to do direct cash transfers in a disaster. And one of the things they said was exciting about it is if you had a disaster in a part of the world that a bunch of people had Libra wallets, the hurricane could still be going through, and they could be loading cash onto people like while it was happening, just like directly. Like that's how directly it could be.
For example, right now, the coronavirus thing happening in Wuhan. And I have friends in Wuhan. I try to send masks to them. No way, all those, the delivery is stopped. I try to send money to them. But again, it can only get to the bank. But those guys cannot go to the bank.
Right.
Because they are kind of, put into the house.
Yeah.
Right. So it's the only way to transmit money is using those technologies.
Okay. Mr. Potter,
I think that was a good summary of what it could promise. Obviously, the big issue was Facebook was it 2.5 billion people there?
Yeah.
And the way this works is you're more likely to meet someone who can satisfy that demand for you the larger the network you're on. And that was one of the beauties of what they were trying to do.
Yep.
There were parts of the scheme that maybe made it more complicated than it needed to be. I mean, we were just discussing this. It was a basket of currencies rather than using the US dollar, which people are really used to using the US dollar. And you wouldn't have this issue of creating a separate unit of account. Creating a separate unit of account governments aren't really into that notion of having a different unit of account.
Yeah. I mean, our government certainly is not into that notion.
That's
it
right.
Seems like, yeah.
Yeah.
Well, so
I think most governments are.
So I think we should get into the basket of currencies. But before we do that, one of the things which I've thought is an interesting narrative within Libra is if we take Mark Zuckerberg and his team at their word, which I understand there's problems with doing that, but let's just say we're taking them at their word, and that the real point of this was to expand financial inclusion, give access to cash and lending and credit to parts of the world where that's not working well, right? Let's say that was really true. It seems to me like those parts of the world haven't had much of a voice in whether or not this even happens, whereas like the nations that have been making a lot of objections to Libra and have been throwing up walls has been, the U.S., Europe, nations that already, and to a certain degree, China as well, which also has cash worked out pretty well. So I don't know. What do you guys think about that? I mean, is that fair? If the point was to help another group of the world, why is it the countries that already have money sorted out well are the ones that get to decide whether or not they have access to it?
That's a pretty deep question.
Huh? That's what I'm here for.
I think that they were trying to understand what this Libra stablecoin would do to the currencies within their countries.
Uh-huh.
They're also concerned about the AML, KYC aspect. But the fundamental one is...
Who's they? When you say they,
the official sector.
Okay,
Is
the big countries. This is what they're worried about.
What makes a country? One of the things is that you have your own national currency.
Uh-huh.
Do you want to have a Facebook country?
Yeah.
And most governments don't want to do that.
Uh-huh.
Maybe some of the smaller governments allow the larger ones to voice that concern about losing control over your national currency and the unit of account you want.
I think I'm completely from private sector.
Yeah.
So I see things a little bit differently. The small countries, people don't use their local currency anymore. It's not trusted.
That's right.
And the hyperinflation. So you don't want to own any local currency.
Mm-hmm.
Right? So people use US dollar.
Yeah.
Okay? And from US Treasury point of view, so dollar is used across the world as a kind of a de facto currency. This thing.
I can go anywhere in the world, people know what that is. Yes.
Right?
Yeah.
And then, so that is, that gives two great things to the United States. One is, so you keep this money, so, for the national security reason, whatever, you can do many things. You can maneuver many things. The second, you print the dollar, it's a debt to the country. Mm-hmm. But once it goes to those countries, and then circulated around there, and it never comes back to the States, it becomes basically equity. So you're doing a kind of constant debt equity swap. So for the US fiscal point of view, it's just great to keep the dollar being floating around in the world, used for in developing countries, can be used for the weapon or trafficking or whatever. Once those money there, it never comes back to treasury. So it's a kind of fiscally, it's a great thing for the United States as well. I think so. From United States government point of view, there is a big reasons for them to keep that kind of status.
Yeah.
And not the Libra or something to take over that status. So that I think one reason why the U.S. government doesn't like Libra. And then, meanwhile, because the states stopped the Libra, China now trying to issue the e-yuan. So that is for the South Asian countries, if those e-yuan is realized, they may people in those countries will use e-yuan instead of their local currency. They may still keep using US dollar, but they may start using some e-yuan. So that is, so kind of big initiatives by China. And then because of the yuan is now coming up, so all countries in the world now really excited, try to, go into the same thing, try to counter against China. So So that's all those kind of things. It's not just the technology. It's not just the economy. It's more like a kind of
Global politics.
yeah.
Yeah.
So there's about 1 trillion of these circulating outside the US, mostly in the $100 one because it's expensive to walk around with lots of 20s. And clearly some of it is used for activities that we don't like. It's very hard to prevent that with any form of cash. A lot of it is used because in those countries it's a much better store of value, it's a better way of exchanging goods. But that's tiny compared to the use of the dollar. Each day there's $6 trillion in the FX market traded. 90% of that is with respect to the US dollar. 80% of the trade invoicing in the world is with respect to the US dollar. So the US dollar is already giving that network effect for most firms and many households in the world that Facebook was helping to do with its network. And the small country, I agree, there are some small countries where you cannot trust the currency that they have, but there are other small countries where you can, and they do have a vested interest in protecting their own currency. You see that from certain countries decided not to join the euro, and they wanted to keep control of their national currency.
Yeah, that's true. So another thing there's a few directions we could go here. We're kind of talking about, you brought the yuan, so let's go this direction. So a question I had, and we talked about this a little bit backstage, but we talked about it separately, and you guys actually said two different things. So this idea of central bank digital currencies, I'm going to say in a way that's a little bit debatable, but it's debatable. But it's the idea that currencies are already digital, but the idea that some nation would issue a fiat currency that behaved more like cryptocurrency does. So it was a little less dependent on centralized databases and things like that, and could interact more freely with things like Bitcoin, for example. So the leading nation which is talking about doing this right now is China, as you mentioned. The Marshall Islands is also talking about doing it. A few other countries have made noises about it. Do you both think that CBDCs, as they're called, which we'll probably start saying up here, so we mean central bank digital currencies when we say that, that CBDCs would be the big topic that they are in 2020 if Facebook hadn't launched Libra in 2019?
Clearly, Libra opened the Pandora's box.
Okay.
But even without Libra, I think it was a matter of time that the people start talking about the CBDC. You know, as you said, to prevent counterfeit, there are lots of technology put into printing bill. It used to be coin, but the coin was too soft, so it's easy to mint and create a fake one. So you created, this paper bill. But now with a 3D printer and all kind of technologies, you can create a pretty good, fake.
Which is why you got all these special things in there to make it harder.
Yeah, that could be. I mean, anything, material can be today with the technology. You can create it, replicate, right? So it's a matter of time. The currency is moving into new stage to use new technology to prevent the counterfeit. So it was a matter of time. But I believe Libra really opened the Pandora's box and accelerated that process.
So I've been in central bank meetings since at least 2013, talking about the technology behind Bitcoin, Ethereum, Ripple, everything.
Yeah, sure.
There was a lot of work that went on in 2017-18. Some documents were produced by the Bank for International Settlements. The viewpoint there was a very conservative viewpoint, and it wasn't as respectful as it needed to be about where the technology could take you to. The Bank for International Settlements, before Libra came out, was already thinking of setting up the Innovation Hub, which is to think about how central banks can embrace the private sector. Singapore was a leader in this as well. How do we make the technology work for society in a really good way? There is a feeling that Facebook's interests aren't necessarily aligned with societies. The society they tried to put together, Calibra, is that what it was called? The association, was an attempt to try and align them.
Libra's the wallet. But
Yeah,
anyway,
yeah.
sorry.
what was it called?
It was just the Libra
Libra
Association.
Yeah, Libra Association.
Yeah, and the
Sorry, I
Libra
get
was
confused.
Facebook's product anyway.
Yeah,
Whatever.
all right,
Doesn't,
yeah.
who
I'll
cares, but-
get confused with all the different
Yeah,
names.
it's-
So there's an association that was supposed to align
Yeah.
the incentives there. I'm not sure how well that works to do the private sector. You usually want the public sector to be involved. Central bank digital currency, banks have access to central bank digital currency. So this week, there's going to be 1 GDP turned over on Fedwire, which is a large payment system by banks in the United States. That's $22 trillion. And that's going to be an account-based one, not a cryptocurrency, because cryptocurrencies can't turn over that much. It's too expensive to turn that over. The issue is whether you, the people in this room, should either directly or in an indirect way have an account with a central bank or have a token that is backed by the central bank of a crypto type.
So I think it might make sense just for 1 second. Let me just do a quick explanation of the basic mechanics of Libra as it was originally proposed. I think some of these things have moved. But so the idea was, so everyone associates Libra with Facebook. And I think that's fair. I mean, it was their idea. They put a lot of money into developing it. But the idea that Mr. Potter was just sort of explaining was that it would be launched by supposedly 100 different parties eventually. They kicked it off with a bunch of companies that you've heard of. MasterCard, Visa, PayPal, Uber, Lyft, some crypto companies you probably haven't, like Bison Trails and Anchorage. A bunch of those guys all left on the same day. That was a very fun afternoon at CoinDesk a few months ago when they were all bailing, really fast. But the idea was each of those guys would put in $10 million apiece till eventually adding up to $1 billion. And that would generate 1 billion Libra coins, each worth $1 apiece. And those Libra coins would be spread around the world to promote the network. But the idea is that once people started using it, if you were, if you were a small manufacturer in Thailand who wanted an easy way to transfer money, over to Singapore, you could put $10,000 worth of your local currency into the Libra system. So that would just go into the same pot with MasterCard and Visa and all the rest of them. You would get 10,000 Libra, and then you could send that digitally with very little transfer fees or next to no transfer fees to your counterparty in Singapore. And everybody would do that. And as Libra became powerful and had a big network effect, all these folks would be putting their fiat cash in, getting Libra coins out, spending it however they wanted. And then whenever they wanted to get fiat again, they would put their Libra coins back into the system. They would be destroyed, and they would get however much the equivalent of value in Libra coins back out was. So the idea is you created this big pot that could generate as much cryptocurrency as anyone ever wanted because you just put in some cash for it and you got cash back out. So that was the idea of how Libra was working. You're arguing that we could easily have, well, I don't think easily, but we could theoretically have a similar system just powered by the federal banks, making it just as easy for normal people to interact with money.
Yeah, the government's managed to do this for a number of years. The issue is whether they'll adopt the technology as quickly as the private sector.
Yeah.
And what we were discussing before, sometimes the private sector innovates in a way that the public sector would never innovate, and you can learn from that in the public sector.
This thing reminds me of back in 1980s
Okay.
when treasury strips were introduced. So I believe, if my memory was correct, because of FASB 87 something, because the accounting thing changed, so that the pension needed the long duration bond. Okay, so Salomon Brothers and the Merrill Lynch created the Tiger on a Cats by Salomon Brothers and Tiger by Merrill Lynch, which is a receipt of the coupons or principals. So it's basically Salomon bought a long bond and stripped into the principals or coupons and then created the zero coupon bond and issue receipt by Salomon Brothers to pension. Because pension wanted long duration note or fixed duration note because it was good for the asset liability management. And it was a big hit, of course. It was a great product. And then I think in 2 years' time, Treasury decided to issue strips.
Okay.
So this Cats and Tiger came fast and innovated the market, and then the government copied it in 2 years' time, and then of course Cats and Tiger disappeared. So that's usually the case. So I would have loved to see a similar thing happen. It's not only Facebook, but also many credible global companies in Libra Association, and then discuss about how it can be better used and blah blah blah, and then they should have come up with some better operational idea, and then later, the central bank can copy it.
Yeah.
That probably would have been the best kind of thing we wanted to see. But what happened was, because of the politics and because of Facebook and blah blah blah, it just completely banned.
Yeah.
So let me build on that. The innovation you're talking about was something that finance theory understood well. And people at central banks were trained in finance theory. And my training is in economics. I'm a PhD. There's lots of PhDs in central banks. Central banks have found it hard to turn over their staff and have people who understand technology, some of the cryptography, and data science that might go behind this. And that probably means that they are going to be slower than they were in the 80s in response to some of this.
I see.
On the other hand, you still should trust the central bank to think about safety and soundness of what this means for the system more than the private sector. Because for the private sector, they don't bear the cost of unsafe and unsound practices. It's the people, their customers, who bear that. And we want to have the central banks involved to make sure when you are conducting payments or you are trying to get a store of value, that you are getting what you think you're getting. And that's an important part of the regulation. As firms innovate, and this is what Singapore and other people have done, there are sandboxes you can put them in, and you can learn that way. That's what the innovation at the hub at the BIS is trying to support in a more global sense. That's going to require a different type of central banker over time, I think.
So, in the cryptocurrency world, one of the big objections to money as we know it is when money moves around the world, there's a lot of middlemen involved, and it costs a lot of money to do it. Whereas right now with Bitcoin, I can send $1 million. I don't have $1 million, but if I did, I can send $1 million.
Well, the value of Bitcoin might have gone up a lot overnight. There you go.
Yeah, right. If I can send $1 million anywhere in the world, it's all the same price wherever I send it, and it would be the same price if I send $1 million or if I send 1,000 or if I send 10. It doesn't matter to the Bitcoin network. It doesn't care. It's the same thing. It's just the cost of mining that one transaction. So to defend the existing system, what are we getting for the cost we're paying for paying all these bankers in the middle to manage our transactions digitally the way we are now? What's the advantage of the current system?
So you can definitely transfer the Bitcoin, and it might not be that costly if you want to use it as a means of payment for real good. Right now, that's expensive stuff. There are a lot of transaction costs, which are larger than the transaction costs of going through the traditional banking system to change currencies.
Yeah, sure.
But if Bitcoin or another cryptocurrency became more liquid, the technology comes in, that might not be the case. One of the advantages of cryptocurrencies is to put competitive pressures on these banks. Those banks do, and this is a discussion we had before, they have to abide by various laws. And they want to be, for particularly large payments can be associated, this is not cash that you would do this with, but large payments can be associated with bad behavior.
Sure. And
you want to try and prevent that. And you don't want incentives for banks to support that. And as we discussed before, what the US has done is basically levied very large fines against banks who flouted international sanctions. That's made it less competitive in that space. And finding ways, and this is what you hear from Benoit Courrier, who's running the Innovation Hub for the BIS, finding ways to make cross-border payments cheaper is definitely a top priority there. But still making them safe and not supporting very bad behavior.
I hear you. It's great, but do you know that how much those so-called corresponding banks for the cross-border settlement bank, how much they make per year only for this corresponding job? Not talking about the forex.
Yeah. So let's say you're going to pass this book over to Brady there.
Yeah.
That's all you did.
Yeah, right. Yeah.
Per year, the all corresponding banks make in total $200 billion
Is that per year?
per year.
Per year, okay.
Okay, and it takes like 3 days to get
Right.
money to the different country.
Right,
And you never know if it really get there.
right.
It takes time, it's kind of vague, and then the huge cost.
Yeah,
You're right, the bank does many things to prevent wrongdoing, but you know what? Bitcoin is Bitcoin, but using a blockchain technology, you could actually create a more transparent
No doubt.
money,
Yeah.
and you can track everything.
Yes. Agreed.
right?
Completely.
So it's kind of it's not just black and white, good or bad. It's more like those technologies should be somehow adopted into the current system. But usually that tend not to happen smoothly. Usually innovation just happens in the private sector, and then the public sector try to chase after that,
Yeah.
and then go to the next stage. So that is something it should happen.
And I guess the reason I'm skeptical that this $200 billion business will really change that much is, I know here in the United States, for example, there's been some great reporting in the last year that, what we're all about to do our taxes in the next month or so. And, in most of the world, that's like no big deal. And we're all going to be completely stressed out of it and probably spend
No,
$100
it's a big deal everywhere.
Well, it is hard to do your tax returns, right? Isn't it paying taxes is a big deal? But doing your tax returns costs a bunch of money here. And we can't change that in the U.S. because the U.S. government can't beat TurboTax, right? And so if the U.S. government can't beat TurboTax, it makes me somewhat skeptical that we'll take away this business from, global banks. I have a hard time believing that the equivalents of the Fed around the world are going to fix that problem. Why am I wrong about that?
So the people I used to work with do
Yeah.
care about the public interest. There are side effects of having better sanctions regime, better ways of making sure that you're supporting anti-money laundering, which is reduced competition. When you reduce competition, you're going to have these rents. The technology we're talking about, with central banks working with the private sector, can add to much more competition in that space. And it will happen. If the rents are as large as you say, there will be some fintech firms who will get the right to transfer money in slightly different ways. If you look at an example of cash, so the Federal Reserve, as we said, there's about $1 trillion of cash outside the United States. The Federal Reserve was faced with fewer private banks who wanted to distribute that cash. So they innovated about a year and a half ago about the type of financial institution that could acquire cash. It's called the FIBIX program. And that, again, was trying to make sure that it wasn't just one firm who could earn those rents. Now, it won't happen overnight because you need to do some due diligence on the technology or the counterparties. But everyone is aware of this, and they want it to get better. And I don't think it's the case that the central banks are there trying to support high profits for these correspondent banks.
Yeah. Well, anyway, I think there's some political pressure that ultimately does reach the central banks. I would suspect. But I want to back up on one thing, not as a question, but just as a clarification for folks. There's a little bit of an economist term that was thrown around in there a couple times to make sure that folks know this, sort of the idea of rents. And so, we all know rent is like what we pay for our apartments. And correct me if I'm wrong on this, but the way economists like to use that term is you have someone who has control of some product that everyone needs, and they have a very limited number of choices to go to that product, and so they're able to increase the price over what the market might otherwise support because you don't have a choice. And so that difference between sort of the natural price and that extra fee is the rent. Is that?
That's right.
Okay.
And that's what you were saying because of the lack of competition.
Yeah.
Yeah. Cool. So okay, let's transfer to a different cryptocurrency a little bit and just talk about Bitcoin, the original one. So. There's some data that came out in the last week or so. A small company called Glassnodes sort of argued, and you can be skeptical about this, but that they had a way of like looking at all the Bitcoin addresses in the world and kind of figuring out which ones were associated with each other. And their data says that if you count up the entities, not the people and companies, whatever, that hold Bitcoin, there's probably something like 24 million entities that now hold Bitcoin. And when I first started working on sort of reporting on crypto a little bit back in like 2013, it was less than a million. Now it's 24 million. It's growing really fast. I mean, is there a chance that like Bitcoin itself, could grow to be the private sector competitor to sort of the central bank system that we're talking? I mean, is that feasible, that this thing that no one really owns will get big enough to be the thing that sort of challenges the way things work now?
Well, first of all, that 24 million thing, I believe, each entity may now have, plural number of addresses.
Mm-hmm.
So that number may be inflated,
Mm-hmm.
I think.
Well, the idea is it's not the number of addresses. The idea is like this company thinks they can
They run an
addresses
algorithm to
together.
see if it's a separate user. Of
Yeah, so
Bitcoin.
they kind of know which ones are associated. So there's way more addresses than 24 million.
Yeah.
But that's the estimate of entities anyway. So
Anyway, well, I think, so as I said earlier, Bitcoin is like a digital diamond,
mm-hmm.
right?
Mm-hmm.
So it's a market price.
Mm-hmm.
There's no fair value.
Mm-hmm.
And something which doesn't have a fair value, which price is determined only by market. I don't think that kind of thing can replace the so-called currency or cash or those kind of market.
Mm-hmm.
So Bitcoin, among the cryptocurrencies, Bitcoin looks like becoming a kind of sole power,
Mm-hmm.
right? I think now the 85% or 90% of the, the mining power hash is now used for Bitcoin.
Mm-hmm.
It's really only one strong coin,
Right.
right? But it doesn't necessarily mean that it can, replace the other settlement systems or currencies, I think.
So I think that's correct. There's three arguments for Bitcoin, I think. One is, and there's a lot of people out there like this, and this is what the financial crisis did, they don't trust governments issuing money.
Right.
They want to have something separate from that system. Then there are people who live in countries where not only do they not trust the government in terms of the money they're issuing, but they don't trust the government in any way whatsoever. And they want a way of transacting that allows them to be freer than they would have been. And the final thing is, I think your really good point, is the world is short of assets which allow you to hedge risks out there. That's your earlier life to do that. If Bitcoin has a feature where it looks like it can hedge risks that other financial assets don't, it will also have value. And those three things, to me, suggest that Bitcoin, there's a lot of people who say it has to be worth zero. I don't think it can be worth zero, but I don't think it can necessarily be worth as much as some people claim it could be worth.
You think there's going to be a ceiling on it at a certain point?
Hopefully. Well, it has to be a ceiling, otherwise something goes wrong, right?
Right.
It depends. If it becomes its own unit of account, who cares? But a ceiling in US dollars would be helpful unless the dollar depreciates a lot.
Speaking of that, one value of Bitcoin is it's got a very little correlation to other financial assets.
Right.
Like, I think it was May of last year, Bitcoin price went up when the US stock market, crashed a little bit. And then we saw a little bit of the money going into Bitcoin, not for the speculation purpose, but for the kind of asset allocation purpose.
Yeah.
That's right.
So that kind of thing, if that kind of thing, continue to happen, then, it will find a more, reasonable kind of a market or price and liquidity.
Yeah. There's a certain irony. A lot of people who are excited about Bitcoin are excited about it because they can make money at times that nobody else is making money. But if it got a lot bigger, right, eventually that effect would probably go away, right? It would become a more stable unit. Isn't that right?
Well, you never know, as there's no fair value. I don't know. I never studied about the price of diamond, but maybe.
Well, gold is I think the easiest.
The gold has got some sort of intrinsic value.
Yeah, but
because there's the usage of
it's not $1,500 an ounce. So.
Yeah. So the gold, by the way, has got a correlation with the size of the balance sheet of the central banks. right? As central bank's balance sheet goes big, then the trust towards the central bank goes down, then the currency goes down, and then gold goes up. That's a similar situation for the Bitcoin. But so we don't know, there's a ceiling for the Bitcoin. It can go much higher. But, it's not something, it's not a part of the asset allocation right now. So it doesn't get out of the speculation, kind of universe.
Okay. By the way, I should say, we're going to do a couple more questions up here, and then I'm going to open it up to you all. I think there'll be folks passing around microphones somewhere, I imagine. So if you have questions you're brewing, start to maybe, get them in order in your head, but that's coming soon. Mr. Matsumoto, I wanted to ask you, so your company didn't start in crypto, but you've gotten into crypto with acquiring the exchange. What insights have you gleaned by being directly in this market that maybe you didn't know before you decided to get into it?
It's really the pot of the newest technologies. The exchange, the company I acquired, if anybody doesn't know, is a company who had got hacked and lost $500 million.
Right.
That's right.
And then after that, we came in and we acquired them. Okay. So when we acquired them, so this the cyber security was really the biggest issue, right? And then I started kind of exposing myself to the community, and then I found that cyber security is only good in countries which is doing war, because cyber is a very important military action area, right? It's a land and marine, air, air and space and cyber, right? And for example, Russia, they have a huge, pretty big defense, the budget. But you don't see that they're making tanks or ships or those kind of things. Where those money go, they all went to cyber, right? So there are lots of the resource and talents going into this cyber attack or defense area.
Yeah.
So I started, meeting with the Russians and Israeli. I didn't meet Iran or North Korea.
Okay.
Yeah, because
But that area is really the pot of the the newest attacking and the defense technology.
Yeah.
In cyber.
Yeah.
Right. And hackers.
Cryptocurrency is. You're saying that's where the people are.
Right.
So let's be careful, though, because account-based systems, which aren't distributing the
Oh no, I'm about to get into this. Don't worry. I wanted to finish this thought. Yeah, but I'm going to bring that. I'm going to go there. Yeah.
And hackers don't try to hack banks anymore, because hackers, even they hack bank, there's no money there unless they hack central bank. But central bank is far away. So, but in crypto exchanges, they have all coins in custodian in themselves.
And no way to get them back once you've taken them. Yeah.
Right. So if you want to learn cybersecurity, you gotta go to cryptocurrency.
So this brings up a great point about Bitcoin. We've been talking about Bitcoin and sort of its and crypto and sort of its theoretical way, sort of how it was all meant to work. The idea is, Satoshi was like, everyone will have these wallets. You can just send money around the world to whoever you want. There's no middlemen. That's the theory, and you can do it. But it isn't how anyone actually does do it. That's not, most Bitcoin that's traded is traded on an exchange like Mr. Matsumoto's. People put their Bitcoin on the exchange. It's a trusted third party, and they trade like crazy, and they try to make money, right? That's the reality. And there are people who are trying to change that and make these global exchanges workable without trusted third parties. But thus far, the new boss is the same as the old boss. We are relying on trusted third parties in this world. And so these exchanges have gigantic piles of cryptocurrency that if you can steal them, you've just got it. No one's getting that back to you, precisely because exchanges may be weak, but Bitcoin is very, very strong, and no one has hacked the Bitcoin protocol yet. So I don't know if you wanted to add to them.
So that's just the same as if I left my wallet and you guys picked it up, you just took the cash.
Right.
I've got no recourse to that.
Yep.
Yeah.
Yep.
Yeah, there's this saying in crypto, not your keys, not your Bitcoin. And what they mean by that is if you aren't controlling the wallet that your Bitcoin sits in, it isn't really under your control. On the flip side, if you do, it's your responsibility. You've got to, if you had $10,000
I'm gonna keep
in
my
there,
wallet close
exactly,
now,
yeah. It's up to you. It's up to you. So so it really brings up this interesting, cryptocurrency, cybercurrency. And if either of you, in your vantage points in this world, have you seen interesting places in which people are really using cryptocurrency in a way that you think is important and different, and maybe does show that this financial innovation isn't just, isn't just playing with internet space money? Have you seen new use cases which are compelling to either of you?
You mean the blockchain or cryptocurrency?
Cryptocurrency, yeah. Well, either one.
Well, distributed ledger blockchain,
Yeah.
you can use in many ways.
Yeah, sure.
The blockchain is a database technology. It can be used for anything.
Mm-hmm.
So all financial instruments, it's basically, it's a combination of data and code.
Mm-hmm.
So it's basically, it's a kind of spreadsheet,
Mm-hmm.
right? If it's equity, if it's a fixed income note, or if it's a swaps, you can write into a spreadsheet.
Mm-hmm.
That means it can be expressed in blockchain.
Mm-hmm.
And then if it's a blockchain, it's much stronger as regard to being, counterfeited, or and also it's portable database.
Mm-hmm.
So compared to the centralized database,
Mm-hmm.
as like a cash, we can just distribute around.
Mm-hmm.
So there are many things can be changed we can change almost all financial transactions using blockchain.
Mm-hmm.
And one thing is, for example, swap transactions or the stock lending, those kind of things. When you want to recall stock,
Mm-hmm.
You might, how do you say, the counterparty may fail to deliver stocks to you,
Yeah.
but if that contract is written in blockchain,
Right.
it goes to to the end,
Yeah.
so you would for sure get it back like that. So the blockchain can be very powerful.
So I think for 5 to 6 years, central banks really focused on the wholesale aspects of this, how could it improve back office operations, how you can reconcile at the end of the day. It doesn't seem to have lived up to some of the potential that people thought. Now that could be because the private banks and even the central banks have been trying to improve their cyber security, dealing with legacy systems. Maybe we'll see some big growth, but compared to the use of real-time gross settlement by central banks, we started about 20, 25 years ago, it's not as being transformative for the financial system as some people hoped. On the retail side, I think the promise of crypto is still there in the sense of all over the world, people are getting used to using their smartphones to make payments. And there's a lot of possibilities once people are used to using their mobile phones for crypto. How it's realized, I think, is how much will the private sector be allowed to innovate within a sort of sandbox which is safe and sound.
Yeah. This isn't a very CoinDesk-y thing for me to say, but on that point, in a certain chunk of Africa, you have a lot of people transacting on smartphones using M-Pesa. In China and Korea and Japan, you've got a ton of people using different, Alipay, Kakao Pay. There's a lot of different options out there that people are doing a lot of transactions already on smartphones. Do we even need, are those things are going really well? People are getting a lot of value out of them. Is there an advantage to crypto over those systems which are exploding?
The problem is today there are so many different those kind of digital, payments, and there's not really interoperable.
Right.
Yeah.
That's a problem.
Yep.
So so once there's one digital fiat is realized, then through that CBDC, all those not only cryptos but also all those digital payments can be interoperable, and that is it's really great for the liquidity reason, and that's where the E-yuan, that digital RMB, could play a big role once it is realized. It is designed to be used for unbanked people. There are 200 million unbanked adults in China. So China is saying the E-yuan can be used for those unbanked people, which is when they say it can be used by unbanked people, it means it should have been using a blockchain because it's a portable database. And it can be used by those who own the smartphone, but who don't have the bank accounts.
Yeah.
But once those kind of EU1 is realized, it can be used in anywhere in the world. Like in Africa, the EU1 can become the standard currency, because there are so many people unbanked there, but everybody has got the smartphones.
Yeah.
So in this, the retail side is really, it's got a big potential as well as a big risk. Like someone like China may take the, too strong position in that area. In wholesale side, I think the blockchain or cryptocurrency can change the accounting a lot because blockchain technology is basically label money, what it is. And accounting, all those, there are so many accountants in the companies and in the world, they are basically relabeling the money. So this money was used for what, right? But if it's cryptocurrency, the money is labeled from the beginning. So that we don't need to have an accounting department. It just automatically, boom, calculated, and no mistake. So it can reduce the risk and the cost and the time dramatically. It could lose the job as well, but it can change many things.
Yeah.
So there, in the corporate side or wholesale side or the retail side, there's so many things can be done. But as you say, it has to be done in the right way.
Yeah.
Otherwise, it can create a big, many big problems.
So I think there might be two fundamental approaches here. One version of what China might be doing is to have a central database that they could have of all transactions.
Right.
It could be happening in Kenya, could be happening anywhere. There's going to be other people who believe that the government shouldn't get to see that much.
Yes.
The government might have the right, if it has a good cause, through the legal system to see some of the transactions, but it doesn't automatically get to see the transactions.
Right.
What will be an issue there is the system like China's will be more efficient. And then if it builds the network effect, that will tend to dominate over another system which is closer to Bitcoin in that sense, where you don't have to have trust and you're not involving the government there. And that will be an important dynamic over the next 10 years.
One thing Facebook proves, just to bring it back to them, is, people do care about privacy. They don't want companies to be creepy, but at the same time, if a thing is really useful, they'll just accept it and they'll just use it.
Exactly.
That's, So let's open up for questions. I'm going to define one term really quickly, but if the question folks could start finding whoever has the first one, or do you want me to call on folks? I'll call on folks. Okay. Oh, we got people thinking already. Let's hear. 4 rows back with right there. If we could pass the mic to her. I was going to define smart contracts, but whatever.
Hello.
Hey, we hear you.
Okay, hi. I would like to know your thoughts on the future of coins by single banks, so JPM coin or MUFG's coin or Wells Fargo's coin, in the face that you do expect central banks to have their own digital currencies. And so how do you see that happen? Do you think that there could be interoperability and still relevance in a future world where you have sovereign digital currencies? Thank you.
I think once CBDC is realized, then it's basically, we don't need bank as regard to the deposit function. Because each individual can have an account in the central bank. And then, so we deposit CBDC in the central bank. And then, if that's the case, the bank will lose ability to get money to lend, so that the bank needs to borrow money from central bank and then lend money out. So bank is going to become not a deposit-taking entity, but just a credit extension entity. But I think that is kind of unhealthy,
Oh, yeah.
right? So that to create the bank coin is, or like in case of Japan, Japan is trying to create a J coin or something instead of CBDC. It is basically Bank Association of Japan to issue coin. So that is probably, the bank would stay as a deposit taking entity and then lend that money out to somebody. So I think that is probably more balanced way. So I don't know. So I see that is probably better solution than just how do you say, concentrated in CBDC. But I don't know. I don't know how it's gonna play out. As you say, for each bank has got the coin doesn't help the interoperability problem. So in order to fix interoperability, we still need a CBDC. And I don't know. At the end of the day, it's how to operate those things.
So my understanding, most of this is on the wholesale side right now. And then you've got Venmo and other methods which are peer-to-peer, but basically are not using crypto. They're just using a single account. One of the main arguments against issuing a central bank digital currency is the public will want too much of that currency. And if they take a lot of it, then the central bank will be responsible for extending credit. I don't think that's a really killer argument in the sense that I gave you the description of FedWire, which is the large value payment system. It turns over about 22 trillion per week. Retail payments, the ones we're talking about, are just a sliver of that. So you could get many of the advantage of this with a small issuance of central bank digital currency. The advantage there is many people in the US are unbanked or underbanked. And that's partly because of the costs of banking those people, and also because of competition and rents that might be earned. A central bank digital currency, just in small size, would make it easier for those people to be included in the financial system.
Other questions? Here in the front second row, at the very end.
Do you see a linkage between the coins you're talking about and a movement such as green finance? I mean, are there some specific future movements that the coin design could actually facilitate or not? Are the two linked?
You could.
Yeah.
You could code it to be linked.
Yeah.
So I could
You
say...
can program anything.
Yeah.
As I said, it's a database. It's like a spreadsheet. So you can code.
Do you expect that to be a breakthrough for green movements? I mean, do you see the coin actually, moving some of the sustainability goals? Because if it is designed by people who have a passion which is connecting the future, are the two connected, or are they so separated in terms of...
But at the end of the day, what technologically or theoretically can be done, or what economically or society-wise done is different, right? You need to have size, liquidity to achieve things to change. So answering your question, yes, it can be done theoretically or technologically, but for that ecosystem to change, that coin needs to get the support or popularity or liquidity.
I can speak to this a little. So I have a previous life in the environmental movement, actually, before I was a journalist. And so one of the big problems when you're trying to sort of green up energy in particular, right? One of the big reasons why we don't see like more windmills in New York City is because it's very hard to manage a distributed energy structure. So if you have a time of very high energy use, for example, when there's a lot of electricity on the grid, a lot of air conditioners are being used, you need to be able to shut off the windmills to the grid so that the power lines don't melt. And that's very hard to do with a centralized system, but it's also hard to figure out how to do it on the fly with current technology. One of the things which is nice about cryptocurrency is cryptocurrency shows a lot of promise for creating markets around distributed systems, which might make that more feasible over time. So that's one of the ways in which I find cryptocurrency is to be an optimistic thing for a green future. But has anyone built that precise structure yet? Not really. People are working on it. But there's ways in which it could be relevant.
And I took you to be talking about a principal that's you with your money, and there's an agent who's going to allocate your money. If you could tag the investments, this is green, this is not,
Yeah.
then you could check that your agent was doing the right thing with your money, because your money could have encoded whatever happens, it doesn't go to the not green one.
So you saw, there's this idea in crypto. Hopefully a lot of you will get interested in this, go start reading a lot more about this topic. One of the things you'll come across a lot is this idea of a smart contract. And so a smart contract is just code that says your money can do this or that. So a good example these days is people are talking about putting stocks and equities onto blockchains of different kinds. A problem that creates is only certain kinds of people are able to buy those things under current laws. But with a smart contract, it'd have a white list of people allowed to buy it, and nobody who wasn't on that list couldn't buy it. That's an example of a smart contract. You could also have a smart contract that said, I will put an investment in this company, but like X amount of my investment just disappears if your pollution goals aren't met. For example, it's a thing you could do. It creates a lot of complications, oracles and whatever, but you could do it. So there's ways in which it's relevant. Yeah.
Yeah, but it's good and bad, isn't it? Because it will reduce liquidity of the entire system, probably.
This is green finance in general.
Yeah. Or whatever.
Well, there's
Whatever,
always trade-offs in
if,
life.
If we do too much of the smart contract thing,
Yeah, right.
then, I mean,
If there's too much rules on money, then money
yeah,
can't
the
move around. It's really
money
hard,
is, I think, the biggest invention of a human being.
Yeah.
It creates a liquidity. It doesn't have a color. But so it's always the balance is very important.
But we're trying to solve some of the incentive problems out there. Money is, paper money is one way of doing it. When you give an investment advisor your money, it's very hard to check on them. Mm-hmm. So I can imagine that kind of product arriving at some point. It won't, there'll be some cost to the person who wants to use that in the short term. In the long term, they're more likely to get the investment goal you wanted.
Yeah.
But I bet there will be a bank or investment bank or someone who try to do brokerage.
Oh, completely, yeah.
Or laundering.
Yeah.
Yeah.
This purpose money and this purpose money.
Yeah.
Yeah, well, that's why you want the government to come in and regulate and supervise the system, yes.
Yeah. More questions? Here in front.
I have a question for both of the speakers. What do you think about the future of Libra? How long the US regulators or European regulators can drag their foot? Eventually, would they let Zuckerberg go, or it is doomed? If it is doomed, what happens if their Libra comes out? We know it doesn't come out, but Line or WeChat Libra may come out. Or one of the competitors of Bitcoin, like Algorand, becomes a viable alternative. Any thoughts on this? And I have a little question for Mr. Matsumoto. What kind of benefits you were expecting by joining the Libra coalition? Thank you.
You go first.
Well, I believe I said before you came, but joining Libra Association is really, I mean, cryptocurrency and the stable coin is really the pot of all kind of technologies and regulation, everything. So by being there, you learn many of those kind of things. So that is joining Libra Association is more like to stay with the
Cutting edge.
not only technologies, but also all kind of, the accounting and the regulation, everything. The Libra, I don't know, I think, the EU1, as I said, the Libra opened a Pandora's box, and the EU1, digital RMB, will be coming, and that will reopen the Pandora's box, and then other countries will issue CBDC, and then by then, people don't care about the Libra. I mean, regulators don't care about the Libra, and then Libra will be realized. So it becomes just a normal. But I think that is what's going to happen. E-yuan probably be issued sometime this year. I guess it's already in experimental mode in some of the Bay Area, like Xinjiang or Shanghai or those areas. So sometime in this year, E-yuan will be realized. And then I think the whole landscape will start changing.
So one of the problems is regulation and laws have not been updated for this digital currency, cryptocurrency world. One of the risks that Facebook and people in the association would face is tripping up over an old law, over anti-money laundering. That's why they need to work with the official sector to understand what would be satisfactory given those existing laws, which weren't really designed for an entity like Libra. And that I don't think there's anything that prevents them from starting it. The issue is how much exposure would you have if you haven't tied these things down. And moreover, the big thing I think surprised them is how much countries, as I've said before, want to control their own currency. And that means something for those countries to be sovereign.
And you mentioned a few other cryptocurrencies like Algorand and Line has a cryptocurrency. The only real advantage that Facebook has over the rest of those is just it has access to 2 billion people, and it could just put crypto wallets on all those people's phones tomorrow if they wanted to. But that's a big advantage. I mean, but that's the only reason everyone's paying so much attention to them.
And that could be a very big fine if it went wrong.
Yeah, right. Cool. Well, I think we're at our time. Thanks a ton to the panel for coming today. I appreciate it so much, Mr. Potter, Mr. Matsumoto. Thanks to all of you for coming. Guess there's a reception, so we'll see you all somewhere downstairs. Peace. Have a good one.